Well, here we go with a look at our grain market activity. Remember, we started out weak in the knees. Let's see if it has regained its footing or not. Here we go to the big board with a look at corn. And right now on the corn market, we have the September contract 20.5 lower. December, the new crop month, still down 21.5 cents on the day. Well, let's switch over and take a look at the soybeans. I'll remind you we had no overnight export sales. Let's take a look here. September soybeans down 57 3/4, and you have November down 57. Whoops, now 56 3/4, and now we're at 13.97.5. Well, that didn't take long to go down below $14 on that one. Of course, we were talking earlier about how we had so much pressure on the crude oil market, and we thought that would put pressure on the corn and soy oil, which it is. And September soybean oil down 175 points right now. October down 192 at 66.38 per hundredweight. Well, let's check out what's going on in our wheat market here on a Monday. We have Chicago September down 12 cents, but look at where it was. It was down at 778, and we bounced off of that by 16 cents now. In Kansas City, you have September down 14 cents. We're at 875 1/4. Just about the same story. That's about, what, 17 cents off of its earlier low. On the spring wheat market here, you have the Minneapolis September down 23 1/4 at 896 1/4. And if you want a ray of sunshine in the ag commodity trade, you look at the cotton market and everything expanded limit up 500 points higher across the board as far as you can see. Well, we're joined by Chris Swift of Swift Trading. He's based in Nashville. He joins us on set live. Sorry, you have to talk about markets like this.
That's all right.
But where's the silver lining here, or is there any today?
There probably is. One thing interesting all my career, I've always heard when China sneezes, the world catches a cold. So that's probably pretty much what has happened now is China sneezed over the weekend. They said we got a little bit more recessionary type things coming in. They cut their interest rates just a little bit and sent a warning signal to the world and says we're not as aggressive buyers as what we were.
So is our best opportunity gone now for the year?
I don't think so. No, not
Really?
at all. We still got harvest to go through, and USDA gave us some great information on Friday. They started to once acknowledge that there is not quite as much corn out there. They lowered the yields just a little bit, and although they did not change the harvested acres, we believe that they will going forward because we have just seen so many instances of an increase in silage cuttings or at abandoned fields out there. So now what it unfortunately gets down to is we just got to prove it. Every single week that goes by when we get into harvest, we'll have a little bit lower yields until we get into the heart of the corn belt. Then we'll see what the real corn crop's going to be.
Once again, this is a year of the haves and the have-nots, right? I mean, either you got a lot of rain or you didn't get a lot of rain. And I don't know how the trade is going to justify that. We do have private crop tours going out, I believe, next week, right? Across the Midwest. How much weight do you think the trade will put on that?
They'll have some, but not near as much to overcome the money flow. Everybody's selling right now this morning, and if they can catch that selling and get more traders in, that's one thing that we've kind of noticed is a very shortage of traders out there. Lots of volume and lots of computerized generated trading, but very few humans are out there doing much because the volatility is immense, and we are getting into the harvest time frame, so things are going to quiet down just a little bit as we go into the end of the year.
Why do you think we're so much weaker in the wheat?
Probably just because we are moving more out of the Ukraine. They're probably getting some things down pat that is going to allow for minimal movement out of that area. And here in the U.S., if we get any more moisture into our wheat belt, that'll help tremendously for our seedings coming up this fall.
Fingers crossed.
Yeah, absolutely.
We need it, that's for sure.
It's all weather.
Yeah.
A lot of weather.
Well, we'll come back in a moment, and then we'll talk about this livestock trade that has a lot riding on what's going on with the grains. We'll discover that when we come back. Well, we covered the grain markets. Now let's take a look at what the livestock trade is doing and how is it reacting to all this. Well, with the big drop in the corn market today, live cattle are a little bit higher. You have the October contract gaining 40 cents. We're at 144.90. You have December up 17 at 150.80. Now you get weaker as you go further out. In fact, April live cattle are a nickel lower as we speak right now. On the feeder cattle side, they have really been basking in the glow of that washout in the corn market today. You have the September contract, 184.70 per hundredweight. That would be up $1.32. And you have October up $1.25 now at 187.25. All the months except for January are over $1 higher. January, well, now it is again. Now it's up $1.15. So I spoke too soon. Now looking at lean hogs, here we're lower across the board, with the most weakness on the nearby contracts. October down 87 at 99.15, and December 65 lower at 89.72. So again, I'll point out that spread is still at work between October and December there. Let's talk with Chris Swift about this. On that lean hog trade there, anything jumping out at you in that spread pattern you're seeing?
Not really. The basis is pretty wide right now. The cash market's still 120, 122, and the future's $20 under that. But seasonally, the hog market declines in this time of the year from now until October. So I think a lot of people are just looking at that and probably just not going to see much happen there for a while.
Kind of tied to the lean hog index on that?
Well, the basis is so far apart, about really all they can do is converge right now. The likelihood of it going sharply lower without the index starting to at least decline some is just not very good.
All right, now what about the live cattle trade? And if we look at the livestock summary from last week, boy, we had some pretty wide ranges out there.
Yeah, we did.
So what does that tell you about this upcoming week here?
Well, we traded some higher cash cattle last week, and I think that could stay for a little while. Our boxes are slipping just a little bit, and I think all we're really doing is adjusting our margins between our various different entities there. Then we are bringing in new dollars from the consumer. Without boxes moving higher, it kind of leads us to believe that the consumer is pretty much fixed in either the amount of money they're going to spend on it or the quality of what products, cuts that they're going to spend their money on.
I see the carcass basis hogs were $2.32 higher. This would be as of Friday afternoon, I guess, according to USDA. Indicative of a general trend, or is it just kind of chopping around?
Well,
right
the hog has been in an uptrend. I mean, they have really been moving, and they put $20 to $23 on that market over the last couple of weeks. So the trend has definitely been up. They took out previous highs from a couple of months ago, so it could be fading just a little bit. I have a feeling with pork prices now up here like this, it might be some kind of incentive to go ahead and start some kind of expansion in hogs.
They've got to be kind of nervous, though, you would think, about the news coming out of China.
You would think so. We haven't really had great big exports to China for a long time. Ever since they started putting their hog production into an controlled environment, that has cut down has increased their capabilities of producing without hiccups in there.
Well, what do you think about the inflation rate here in the U.S. heading toward the end of the year? Some say it'll maybe come back again.
Yeah, we kind of thought of that all last week. We watched the energy prices move a little bit higher. We saw some aspects out there, more money coming in, more government money coming in. They passed this, whatever they call it, Inflation Reduction Act, and seems like it might end up putting more inflationary aspects out there to it as payrolls continue to grow. But I don't know. It's a tough call. I think one day they're looking at recession, one day they're looking at inflation, and again, why a lot of the high volatility.
Exactly. Chris, good to have you with us.
Always a pleasure,
Marlin.
Yes, sir.
Yeah, thanks for coming in. Chris Swift of Swift Trading. Janet, back to you.